Yes, another Tuesday evening, and I'm back again. Hello, everybody. Good to see you on. And we'll put the pre-show on just for a moment or two. Nice to see some new faces and some regulars there, and some good discussion in the chat beforehand. Always fascinating to see what people want to talk about. And of course, Leith will be in shortly, and we're going to have a really deep dive into the Australian economy. Who broke it? What can be done to fix it? And hope you like the thumbnail. I was playing with the Google AI to make that particular thumbnail, so that was quite fun. As always, of course, we have the doggies here. Well, we have one of the big doggies. The other one's moved a bit, and of course, we have the studio set up. We have Leith there over, ready to come in shortly, and everything else is working. I'm doing some work on the studio over the next few days. We're having the power fixed. Every time I turn everything on, I blow the fuses, so we need to have an extra power circuit, and we're going to do the upgrade to the fiber as well at the same time. So that'll be fun the next few days. That means that normal output will be restricted, but there are some shows that I've got to fill the gap anyway. Right, well, we've hit 8 p.m. I'm going to take the pre-show off. I'm going to start the show. I'll be back in just a second. Well, good evening and welcome to this live stream on the 16th of September 2025. Martin North here from Digital Finance Analytics. Thanks for coming on tonight and sparing some of your Tuesday evening. Really appreciate it. I think we're going to have a really interesting conversation with Leith. Very, very deep in the economy and economics and what's really going on. And he's been shaking a few trees the last couple of months, upsetting the ABS and amongst other things. So that's all great fun. Before I bring him in, let me just remind you, we're not providing specific financial or legal or property advice, a general conversation only. We moderate the chat, but feel free to throw your questions, comments, and suggestions as we go. I don't necessarily follow all of the threads in the chat because there are so many, but if you use that Walk the World, you can get my attention. And if you have a question you'd like to bowl at Leith, then use that Walk the World for that. I've also enabled Super Chat, which means that you can get your question to the top of the list, or indeed make a contribution to what we do around here. We would appreciate, of course, if you do that. We don't do this for profit. We do this because we think there's a really, really important conversation to be had, and especially now. Right, let me bring Leith straight in. Leith, great to see you back on again. How are you doing?
Yeah, good. Thanks, Martin. How about yourself?
Yeah, I'm pretty good. We've suddenly got autumn here. We had 3 months of summer, almost no rain, and everybody complaining we got above 28 degrees, and people saying, oh, we need to buy air conditioners. It was hilarious, really. I kept saying, yeah, I have no idea. If you want to see a real summer, just go to Melbourne in the summer or Sydney in the summer. Right? But anyway, it's a bit cooler now. But yeah, everyone was pretty confused about a warm summer. So there you go.
Yeah, nice. Well, yeah, we're obviously at the other end of down here, and yeah, Melbourne at the moment is just in spring, which just means wind, hay fever. My two least favourite times of the year is winter, obviously, because I hate the cold, and spring is not great either because I do get hay fever and it's just unsettled. Whereas I love summer and autumn. So anyway, it's still better where it's getting warmer, so I don't have the heater on in here, so I'm saving money, and that's always good.
Saving money is good. Now we're going to have a really interesting conversation. I don't know whether you enjoyed my thumbnail, but I couldn't resist it. It was just I have suddenly had this vision of the Australian economy as a deflated balloon, sort of prickled with housing and sort of all the migrants on the shore looking at it, and I'm thinking, that's quite a good one. So I managed to get Google AI to produce it for me. So yeah, that's the that's the tenor of the conversation. Who broke the economy? And clearly, a lot of it is going to be about housing, the rental sector, and all of those things. Of course, we had the productivity roundtable over the last couple of months, which was a lot of hot air, and not a lot else came out of it. We've got your stoush with the ABS on statistics, which was also hilarious. So plenty to get our teeth into.
Oh, 100%, mate. There's always a lot to talk about in the land of the land down dumber, I should say, is, probably the way to describe Australia at the moment. So unfortunately, there's not a lot of good stuff going on here. I do a weekly interview with 2GB on Saturdays where I have to do a champion of the week or a clowner of the week at the end. And I've done like 8 clowns in a row because I just can't find any champions at the moment because we're just run by clowns.
And that's really my point. I sort of said who broke the economy, or why is it where it is, or what broke the economy. The who and the what's, of course, all connected. And somebody in the chat said, well, is it just the politicians? I don't think it's just the politicians, but I do think they have a policy failure over 40 years. And if you go back 40 odd years and just think what the economy used to be like, Australia had a very strong economy. The GDP was very strong. The story, of course, was that migrants would come and find it was an amazing place to be because it was very friendly and it was very open and things were so cheap and, the boom, boom, boom. And then suddenly, well, it's been going, and over the last few years, the rate of slowing is pretty dramatic. House prices, of course, are strangling everything. More and more of the economy is housing because everything else is just disappearing, partly because of energy. We might come onto that too, of course. And so you got to sort of stand back and think, well, is it deliberate? Has it been a deliberate set of things that people have done over the last 20, 30, 40 years, or is it just happenstance? My theory is, no, it's not just events, dear boy, events. There were a series of decisions that were taken and are being taken, which is leading us into the dirt.
Yeah, absolutely. And I mean, there is more to point a stick at. So you obviously have the, I guess, deregulation of the financial system, which part of that was good, but the sort of the turning everything into a speculative asset. So whether that's through the tax system with negative gearing and capital gains taxes and all the stuff we did there, and the financialization of housing. You've also got obviously the massive ramp up in immigration, the notion that the mining boom that in the early to mid 2000s also gave us a massive case of Dutch disease, whereby the Australian currency went up to above parity with the United States, and that basically shrunk the manufacturing sector. And then we've doubled down on that with idiotic energy policies, which have basically driven up the cost of gas and electricity in Australia, despite the fact that we're massive exporters of energy. Just crazy stuff. And that's also deindustrialized us as a nation and added to cost of living and all these sorts of things. So yeah, there's a whole series of basically mess ups that has happened over the last 30 to 40 years, and it's turned us, like you said, from a affordable land of milk and honey with a fairly diversified economy. We actually had a manufacturing industry back then, to one that's basically been totally deindustrialized and has turned into a Ponzi economy that is reliant on never-ending rises in house prices, more and more government spending, and just mass immigration to try and get headline GDP, growing while per capita living standards collapse. So unfortunately, yeah, a lot of it is self-inflicted, and I think some of it's also just poor management of the early 2000s commodity boom that happened, and not saving the bounty, like not taxing mineral wealth properly as well. So we've become far too reliant on inefficient areas of tax and inequitable things like just forever taxing workers more and more, rather than taxing resources and consumption and land and those sorts of things that are more efficient and also more equitable. We should be the richest nation on earth, really, when you think about it. Especially at the turn of the century, we had 19 million people sitting on this enormous landmass. And then in the early 2000s, we were kissed on the backside with this absolutely ginormous surge in our commodity prices in terms of trade. And that should have made us uber rich. Like, we're back then, by the time that came around, we were, less than 20 million people. And we suddenly got this huge pay rise as a nation, whereby everything we sold to the rest of the world just went up, and we got all this extra money. And the federal government didn't capture that correctly because we don't tax that stuff properly. But also the money that we did get through the soaring corporate taxes and things like that, the government just, weeded up against the wall and didn't save it. and we didn't set up a sovereign wealth fund, and we didn't do all this other stuff we should have done, like Norway did. And instead, we decided to massively ramp up immigration, and we went from a post-war average for 60 years of 90,000 net overseas migration to, in the 15 years leading up to the pandemic, 220,000 a year. And then the last 5 years, including the COVID border closures and the period of negative net overseas migration, the last 5 years, well, the 5 years to the end of last year, we averaged 260,000 net overseas migration. So we haven't taxed any of our mineral wealth properly at the same time as we've grown the population like a science experiment, grown by 8.7 million people this century. And that's just diluted our mineral wealth even more. And it's effectively made us poorer per person, which is just stupid. Like when you think about it, what we could have done if we had smarter leaders and actual visionaries is we could have actually banked the bounty from this, enormous commodity boom that we had and set up a sovereign wealth fund like Norway has and tax the stuff properly and not growing the population so aggressively. So that sovereign wealth fund would have been worth far more per person. And we'd be in a far better state now. And, then of course, we've got all the mess ups we've done with housing and all these other areas as well. So really, it's just been, 25 years at least of absolute policy failure in this country, which has basically got us to the situation we're at, where we're basically this stagnating economy with some of the world's worst productivity growth that is basically just growing off the back of running one of the world's biggest immigration programs per capita and becoming more and more government, reliant on government spending to power jobs and to power growth. And it's just none of this is sustainable. And now the government is trying to basically kickstart the economy by pumping up house prices because that's, supposedly worked the last 20 odd years. So I think, well, we'll go back to the playbook that we've done the last 20 years that has actually made us a worse nation and poorer in a structural sense. And we'll just keep the throttle in immigration. We'll, reflate house prices, etc. And that is supposed to make us wealthier. It hasn't worked for the last 20 years, but these clowns that run this country think that we can magically turn things around and become a successful nation again at the same time as we drive up energy costs. It's just clown show stuff, Martin.
Yeah, and the old definition of insanity, you continue to do the same and expect something different to come out of it. Now, one of the little high points, low points, depending on how you're looking, I'm going to put this up if I can get it. There we go. Was from Danny, what about the Australian stock market? Australian stock market, of course, hitting all-time highs. Now, is that an indicator of anything like success? I don't think so, but what do you think so?
Not really, no. I mean, look, the stock markets, go up and down, and they're obviously very frothy at the moment, not just here, but also abroad. So, look, I'm personally not planning to invest in the stock market. My whole plan is I'm going to wait till the next downturn, whenever that comes, because it'll come eventually. There's always sell-offs, like very big sell-offs. You might have to wait 5 years for them, but when that happens, that's the time that I'm going to buy in, personally. But look, that's not a great indicator, I don't think, it's certainly not an indicator for per capita living standards, and that's the stuff that as policymakers they should care about. It's not the price of assets. It's per capita GDP, but even that's not a great measure on its own. But it's it should be quality of life indicators, and the best material indicator is arguably real per capita household disposable income. And those are the sorts of things that policymakers should be focusing on, maximizing those sorts of things, not asset prices. Like, we could also use that same argument. Look, Australian housing is the most expensive it's ever been, so therefore we're doing really well, and that's made Australians notionally rich. Like, Australia ranks number 2 in the Credit Suisse Global Wealth Report, or the UBS's one as well. We always rank number 2 in the world on median wealth, and if you go by that, we're swimming in money. But what those surveys tell you, if you read beyond the surface, is that Australia's wealth is driven primarily from our expensive housing. So because we have one of the most expensive housing markets in the world, and according to the ABS, the latest CoreLogic chart pack that for August that was released this week, Australia's residential housing stock is now worth 11.7 trillion, spread out over about 11.3 million homes. So that means that the average dwelling in Australia, so that's whether you live in Sydney or you live in the middle of nowhere in Central Australia, or you live in a bedsit apartment or a house, the average across the entire housing stock is now worth about $1,040,000, which is just an obscene amount of money. And that is the primary reason why Australia always ranks high on these wealth surveys, because we have a very expensive housing market. And unlike most other countries, the majority of our wealth is actually stored in housing rather than financial assets. So we are quite unique here. But I'd argue that we'd actually be a wealthier and richer country if our housing was cost half as much as it does. Imagine if it was average, it was, $520,000, not $1,040,000. And Australians were carrying, 70% of their incomes as household debt rather than 140%. Actually, it's more like 180. But, if they were carrying 90% of their income as household debt rather than 180%, we'd be much better off. We'd be a more diversified economy. Households wouldn't be spending so much of their income on mortgage payments. And young people would actually be able to get into the housing market because it wouldn't be so expensive. So, a lot of this stuff is fake wealth that Australia has. And it's actually made us a less diversified economy and a worse economy, and also a lower productivity economy. So, unfortunately, we've shot ourselves in the foot, and progress is not making asset prices go up to make ourselves look richer on paper. It's the individual, livability indicators that matter.
Absolutely. And of course, the truth is that the value of that dollar note that you hold in your hand is now worth a lot less than it was a year ago, 5 years ago, 10 years ago. So, you're just flooding the markets with liquidity. Assets go up, the numbers go up, but the value doesn't go up. And that's really the problem. And we've now got, a significant question, I suppose. And it's a fascinating question as to what's next. Steve said, are we due a crash like Ireland? As we'll discuss shortly as we get into property. I think both you and I believe that property prices are likely to climb in the short term, but they're at an unsustainable level long term. And if something's going to actually break at some point, it's just a question of when and if and how. Net of what happens with Trump tariffs and all the rest of the stuff around the world. We've dug ourselves a really nasty hole. We haven't invested in things we should have invested in. We didn't put money aside when we had the opportunity a couple of decades ago. They bought votes, and they managed to allure people into the idea that house prices continuing to climb was good for everybody, despite the fact that, of course, as we've said, it's artificial, it's absolutely fake. More people are finding it more difficult to get in. And then the other thing, from a Treasury perspective, economically speaking, they only measure the top line GDP. They only actually see it in terms of, well, I get more people. I've got more people to pay tax. I've got a bigger number. That means that we must be doing the right thing. And unfortunately, even some of the pet economists in a lot of the major firms across Australia are still drinking the same Kool-Aid and saying, that's the way to make it work. But actually, no. When you look at it and stand back and just think about it from an individual perspective, first, you're having to put a lot more of your income just to get somewhere to rent or somewhere to buy than previously, which means you have less to spend on other things, which means your economic momentum is lower than it was. In real terms, your income's going backwards. And then, of course, more broadly, we've narrowed the base of the economic flywheel in Australia as less and less is actually built here, less and less is actually manufactured here. So the narrow base is becoming more and more a three-legged or a two-legged stool. You've basically got minerals and you've got houses and not much else, and it's highly unbalanced. And that means that, of course, the risks of creating a downturn are actually rising at some point. Now, it's not going to be pleasant, but I actually think that at some point we're going to have a come to Jesus moment, because otherwise we just go on into the stratosphere with ever higher house prices and ever less economic activity.
Yeah, and also more debt, obviously. So just more households spending more and more of their lifetime earnings just to put a roof over their head. It's not exactly very smart. But I personally think I'm not sure. Should we get into the housing outlook now? Pull the Band-Aid off, and what do you think?
Yeah. Now let's do that. Let's start with the housing story, because I think that for people to understand the Australian economy, you have to understand the story around housing, right?
Yeah.
Australian economy, housing and holes, housing being the most critical one.
Yeah, or alternatively, the Australian economy is, a housing bubble with an economy attached, something like that. That's probably not a bad way to describe it. But yeah, so my view on the housing market is we're in for a pretty strong 12 months, right? But after that, I'm pretty nervous about what comes after that, and I'll explain that why. So I've got a few charts I prepared on this. It's probably worth, we'll pull these up first and just run through the numbers on what's going on in Australia's housing market. But I'm not sure if you can see it at your end, Martin. Does that come up? Here we go. So I used this chart last time, and I think I've used it the last couple of times because it's about 6 months old, but it's not a bad starting point. So this comes from Cotality, or used to be called CoreLogic. And basically what it does is it shows the state of Australia's housing market at the end of last year. And what it showed is that on every single measure, Australia's housing market was at basically record low affordability. So the dwelling value to income ratio was basically at its highest ever level at the end of last year. The percentage of income used to service a mortgage was at its highest ever level. Now that individual indicator would have come down because we've had 3 RBA rate cuts, but even so, it's structurally high. The number of years to save a deposit was at an equal record high. Again, I'll get onto this later, but obviously the federal government's trying to change that with its 5% deposit rule to try and, bridge that gap. And finally, if you're a renter at the end of last year, you're paying a record share of your income to rent the median home. So, on every measure, it was an absolute disgrace. Now, obviously, we've had 3 rate cuts now from the RBA, and financial markets are tipping 2 more rate cuts by mid next year. Now, there is a bit of conjecture. The markets have been sort of firming up, and CBA's come out and thinks that we're only going to get 1 more rate cut. So that's obviously possible, but irrespective, we've had 3 rate cuts already, potentially 2 more by mid next year, and we might get more than that if the labour market weakens more than expected. We don't know, but I guess the bottom line is the forecast is for further easing. And every time rates have been cut in Australia in the last 40 years, house prices have risen. So there's 2 charts there in the centre and the right. One's from CBA in the centre, and the other one's from the AFR, where they both of them have both CBA and the AFR measured house price rises after previous rate cutting episodes. And it was pretty much only the 1990 rate cuts, which basically were in the last major recession, where we didn't really get much uptick. But typically, house prices rise by at least double digits 2 years after the first rate cut. So just based on the law of averages from that, you'd think that we're going to get a pretty strong uptick. But this time around, it's also been, it's going to be fueled by stimulatory policies and some other bank lending stuff. So, at the federal election, Labor announced that they're going to allow first home buyers, and this comes into effect the start of next month. So we're only, a few weeks away. Virtually all first home buyers from the start of next month will be able to buy a property with just a 5% deposit without needing lender's mortgage insurance. And what the government's going to do is basically taxpayers are going to guarantee 15% of virtually all first home buyer mortgages from the 1st of October next month. Now, you don't have to be a rocket scientist to know what that's going to do to home values. If you've got a whole bunch of people who cannot buy property now because they need a 20% deposit, or they've got to take out, lender's mortgage insurance, which is expensive, and suddenly you remove that requirement and they can get in the housing market quicker, well, then you're going to then put upward pressure on house prices. You're going to have more people bidding for housing, and you're going to have people taking out larger mortgages than they would otherwise. So that's just going to bring forward demand. The government also excluded student debts from loan serviceability calculations. They've expanded their Help to Buy shared equity scheme. Queensland's also expanded their shared equity scheme. There's a few other ones I've missed in here. We've also seen, various lenders introduce new mortgage products that are going to basically reduce the amount of repayments. So they're going to, for example, there's now 40-year mortgage terms that some home lenders are providing. So back when I was a kid, it used to be 15 years, and then it went to 25 years. Currently, it's about 30 years as the norm. Now 40-year mortgages are coming into play. And all that does is that basically reduces your monthly repayment, but then it extends the time. And what it allows is it increases borrowing capacity and allows people to take out larger loans than they otherwise would. And also AMP, and I'm sure other lenders will follow, they've brought in a 10-year interest-only mortgage without reassessment. So basically, and that's not just for investors, it's for anybody who wants it. So we're starting to see lenders now bringing these, stimulatory mortgage products to allow people to borrow more than they otherwise would and to lower their monthly repayments. And all these sorts of things will basically boost borrowing capacity, mortgage demand, and prices. And the chart on the bottom right there from Alex Joyner, I used this one last time. It basically goes back to the mid-90s and it tracks the change in dwelling prices to the change in mortgage size. And you can see that pretty much every time the government's brought in a policy like first home buyer grants or whatever, that's enabled people to borrow more money, it's effectively been capitalised into higher prices. And all we've ended up with is Australians carrying bigger mortgages and house prices being higher than they otherwise would have been. And that's going to be exactly the same result from this 5% deposit scheme and these other policies. So we've got a double whammy of the Reserve Bank rate cuts. We've already had 3. We might get another 1 or 2 or whatever, as well as this sort of stuff just is red rag to a bull for house prices. And Australians know it because pretty much all the indicators that have come out, recently show that Australians have turned very bullish on housing. So first, we've got auction clearance rates. They're now running at their highest level for well over a year. That's the bottom left chart. They've surged, and you can see by that chart where I plotted auction clearance rates against, so that's the monthly average auction clearance rate from Cotality, plotted that against the quarterly house price growth. And you can see that historically auctions have led house price growth. So with auction clearance rates booming, you don't have to be a rocket scientist to know what that means for prices. We've also seen the 2 middle charts there from Justin Farbo at Anapati and Macro. He's plotted the latest data on from Cotality, their daily dwelling values index. He seasonally adjusted it. You can see that basically home value growth is just surged. So, we've got upward momentum. Prices are now rising quicker. And on the right, we've got the Westpac Consumer Sentiment Survey results. And what it shows is that house price expectations are at the highest level in about 15 years, according to Westpac. That's the chart on the top right. And also the time to buy dwelling value index has also increased pretty sharply from a cyclical low. And what that meant, all this data tells you is that, home values, auction clearance rates, house price expectations are all on the way up. And that just points to higher house prices. So, the outlook's very strong for the housing market. At the same time, we've got a supply side that is completely stuffed. Now, supply doesn't really matter so much. I'm talking about structural supply, not the number of homes that are on market for sale, but actual home construction. It doesn't matter too much in the short term for prices because it's more set by, momentum and credit and those sorts of things. But we still have this structural housing shortage whereby, the level of construction is down a lot from recent historical experience. It's not expected to recover. We've got a worsening housing shortage because the government continues to run a very high immigration program. And the National Housing Supply and Affordability Council tips are going to be, we're going to have a worsening housing shortage of about 79,000 over the next 5 years. And that comes on top of an estimated housing shortage of 200 to 300,000, according to Shane Oliver. So it's not a great picture there. And it looks like immigration's actually picked up again. So at the end of last year, so for the December quarter last year, net overseas migration fell to 340,000. Now that's still higher than anything we'd ever experienced before the pandemic, but it was down from a peak of about 550,000 in 2023. Unfortunately, we don't have the official migration data. We're still waiting on that. That comes out later this week for the March quarter. But however, there's a proxy. It's the net permanent long-term arrivals data, which the ABS releases every month. We've got data up to July, and that as the top middle chart there from Tariq Brooker shows, in the first 7 months of this year, we had the highest net permanent long-term arrivals in the nation's history for the first 7 months of the year. So it was actually up by about 5% on last year's record. And the chart on the top left from Justin Farbo plots this series against the quarterly net overseas migration data. You can see it's very highly correlated. And what it suggests is that immigration's picked up again this year. It's surged again. And that's also been reflected in the top right chart where it shows that the rental vacancy rate is now fallen again back down to its historic lows. So basically, all the data is pointing up to a pretty big, strong run up in home prices. Now, this is where things get a little bit hairy. So, I'm tipping at least the next year we're going to have strong house price rises. So, how far, I don't know, but it looks like it's going to be very strong across the country. The thing about it is, Martin, what comes then? What comes next? So, New Zealand and Canada, which I argue are the two most similar countries to Australia, both both in terms of their political setup, their demographic setups, their cultural setups, those sorts of things. Those two nations have had very hefty house price corrections. So the chart on the top left, this comes again from Justin Farber down in Putty Macro. He's plotted it's about a month or so old, so it's not totally up to date, but you get the picture. And it's plotted Australia's house price growth in yellow, which you can see it's just gone up. It only goes back to 2015, but it's also got New Zealand and Canada in there. And you can see that New Zealand in the grey and Canada in the red have actually experienced very hefty house price falls. And the chart in the top middle that comes from Ben Rabideau is a Canadian analyst. It actually shows that Canada's real house prices have fallen 30% from their peak. And their peak was in February 2022. And the chart on the right, again from Justin Farbo, shows that New Zealand's house prices have also crashed. In real terms, they're back to where they were in the late 2019. So here's the thing. Yes, we're going to have very strong price growth over the next year, maybe 18 months, I don't know, whatever. But what's stopping Australia from following New Zealand and Canada after that? Like if we have a big uptick in home prices, Australia's housing stock is already worth about 4.2 times the economy. It's at an absurd level. What's to stop house prices falling? And especially in markets, I've got a table there from PropTrack showing the 5-year growth rates, the average dwelling values, the median dwelling values, etc., across the major capitals. And you can see that places like, Melbourne's probably pretty safe where I am because it's only had a 20% price rise over the last 5 years in nominal terms. So in real terms, it's gone nowhere. It's probably down a little bit. But, places like Brisbane that have gone up, 90% plus, or Adelaide. Perth's always been boom bust. It goes up and down with the commodity cycle, etc. But places like that are looking very frothy. And I wouldn't be surprised at all if a place like Brisbane, after having more of a run up and getting even more expensive, Brisbane's now the second most expensive housing market in the country after Sydney. It's overtaken Melbourne. 5 years ago, Melbourne was far more expensive than Brisbane. Brisbane's just shot way ahead. It is super expensive. It looks super bubbly. If it has another 12 months of run up, it's pretty likely a place like that could then have a bust. And Australia nationally could go the way of New Zealand and Canada, with places like Brisbane and Adelaide, for example, getting hit very hard. So, we'll have to wait and see what happens. We can probably, I guess we can revisit this next time, this time in about a year's time, Martin. But, I'm tipping a strong run up in prices, but then after that, a strong likelihood that we're going to have a pretty severe correction, similar to like what's happened in New Zealand and Canada.
Yeah, and a couple of quick observations. Firstly, of course, prices are up, but real incomes are not growing. And if you look at it, more and more people are paying a greater and greater share of their income to get either rent or to buy a property. The duration of the mortgage is a lot longer now. You mentioned 40 years, and I'm certainly seeing that. The average duration's now close to 35 years. It used to be 25 years. And so bearing in mind that people are also now forming households up to 10 years later than previously, what it means is that you're in debt servitude for a lot longer, for a lot later. And now we're seeing more people in my surveys, more people going to retirement with the mortgage still around their neck, which is not good. The second point to highlight is that there is still a lot of momentum in the investment sector of the market. And in fact, if you look at credit growth for the investment sector has been stronger than for owner-occupier. And so we are seeing people piling back into the investment sector at the same time as I'm seeing other investors bailing out, particularly in Melbourne, because of the property investment returns being so low in Melbourne. So you've got this really sort of weird shuffle in the investment sector. And then the third point, and this is, I think, the critical one to sort of just think through this, the mix of property is changing because, of course, the government strategy we'll see later is to build more more new property, but most of it's high-rise property, most of it's dog boxes, and again, I see a lot of people stuck because they don't really want to go and live in the dog box. They much prefer to live in a low-rise or a semi or a house. But the affordability path of that's almost impossible. So you've got life choices that people are trying to make in this context of ever bubblier higher prices, more debt, longer term debt servitude, and a lot of people are feeling really uncomfortable.
Oh, absolutely, and we mustn't forget the renters here, because often we talk about house prices, but really the renters are the forgotten people, and they are getting absolutely poleaxed. And I've got a whole series of charts, and I want to do a whole rant on the rental market, whether we do that now or later. But it's the renters who are sort of the forgotten people here, and it's also would be first home buyers, which is part of the reason why I think the government is trying to do this 5% deposit scheme, because at the moment, if you're a first home buyer, you're getting a double whammy, right? So usually people got to save up money before they buy a house. And that's typically happens unless you can live at home, which some lucky people can. But if you've got to rent first and you're getting smashed in the rental market, that makes it a lot harder, obviously, to save up a deposit. But then, and I attribute that primarily to excessive levels of immigration, right? Because we're growing the population faster than Australia can supply housing, and that has destroyed the rental market. But and at the same time, so you're trying to frantically save up a deposit. You're paying more in rent than you ever have, and rents keep rising. So you're losing more of your income while you're trying to save a deposit, having to pay rent. And then prices keep going up as well. So the goal of home ownership just keeps moving up further and further away. And I think that's the primary reason why the government's brought out this 5% deposit scheme, because they're like, well, we've somehow got to bridge the affordability gap somehow. And I don't mean affordability in structural sense. I mean the purchase affordability gap. And allowing people to buy with a 5% deposit means that they can obviously don't have to save up as much and they can get in earlier. But it doesn't solve the problem. And in fact, it's going to make the structural housing affordability worse, because it's going to increase demand. You're going to end up with higher home prices than you would otherwise. And at the end of this whole thing, the first movers who get in first won't be as bad off. But if you fast forward, say, 5 years, and you're looking at the first home buyers in 5 years' time, the prices would just be a lot higher than they would have been otherwise. And they'll be buying with 5% deposits. And all they'll end up doing is they'll end up paying more and having less equity and taking out far bigger mortgages than they would have otherwise. And they're actually worse off. They end up paying a far higher proportion of their lifetime earnings to service a mortgage for housing than they would have otherwise. So this is just a diabolical situation Australia has got itself into. And unfortunately, it's just been, fanned and fueled by our policymakers, who are just absolute morons, who just keep throwing more fuel on the housing bonfire and keep getting us into more debt and making everyone's situation worse with these Band-Aid policies that, with that chart I showed earlier with the, average mortgage size and home prices just following each other in lockstep, we're just going to get more of that. And this is the clown show, policymakers that we have in Australia.
Yeah, and I just want to highlight, I've been talking more recently about what I call the subscription economy. So effectively, more and more and more, we've got people paying for longer and longer and longer. So you'll never own anything, but you'll continue to pay. And housing is a good example of that. Whether you're paying rent or whether you're paying a mortgage, the duration of the mortgage is getting longer and longer. So, people are just getting used to the idea of, I'll just go on paying and paying. Now, who are the winners here? Just think about this, right? The banks are actually having a field day. They're lending more, they're lending for longer. So then their income growth is very strong because, of course, they are actually getting that flow for longer and longer and longer. You've also got another factor to bear in mind, which is that with the demand quite strong, people are getting less picky about what they're buying. And quite often what I see is that people are actually jumping quite quickly to try and grab something just because it's, there. But the third point is this: you mentioned the 5% deposit, but you also mentioned the risk of a housing downturn. Now, who's going to lose out if prices, for example, drop 15%? Now, obviously, that 5% deposit goes. But the government, who's now going to underwrite, they're going to take a hit as well. So that is another factor to bear in mind. And bear in mind that the Productivity Commission made the point in a couple of recent reports that all these first buyer incentives, one, lift prices higher, two, enable people who were already going to buy a little bit sooner, but three, didn't fundamentally address housing affordability problems for those who actually really needed the help. So it was misfocused, misplaced, and won't actually provide any long-term support for the economy. So no, even the people who actually claim to study this stuff, but no, the government just ignores it and just does it anyway.
Yeah, and if you think about that from an economy perspective as well, you mentioned that the banks are the big winners. Well, the whole banking system's been distorted by this stuff. Because back in 1990, banks lent about 2/3 to businesses and 1/3 to mortgages and personal lending. And now it's completely flipped around. You fast forward, 35 years, and the banks now lend basically 2/3 for mortgages and, about 25% to businesses and the rest for personal loans. So we've just completely distorted the economy now, whereby the whole banking system is just basically about lending for housing rather than productive stuff, which is the things we actually need. So companies can, invest in in expansion and in business investment and all this other stuff, which is what ultimately proves us as an economy. But instead, we're just blowing a bigger and bigger housing bubble. It's just crazy, crazy stuff.
Absolutely. Well, I've always said that, to my mind, it's the black hole, right? And the black hole of housing sucks more and more into it and effectively creates a greater and greater vortex. So everything gets sucked in, and there's less then to invest in other things like proper business investment for the future and those sorts of things. And what it means is that we, as you said earlier on, it's not an economy, it's a housing market with a little bit of peripheral activity around the economy. And of course,
it's a housing bubble with an economy attached, is what I meant to say.
Exactly. But the other point, of course, is that the other bit of the economy, the resource sector, is potentially also under strain now with what's happening with China, what's happening with tariffs. And so, we can't necessarily guarantee the momentum from the other leg of the stool, which of course was the resources sector. And by the way, we're being, robbed blind by the big gas companies who are actually charging us international prices for the gas just on the way through, which has a direct impact on electricity prices, which is why manufacturing is disappearing. But also more broadly, it means that more profit is going away rather than actually coming back to Australia. We should have, but didn't invest like, for example, some of the Scandinavian countries did. When they had this big boom, they actually put it into a government fund, and then there's money available for things later. No, we didn't have a sovereign fund; we just gave it away. And so we've got this really weak economy. And I get accused sometimes of being negative about the Australian economy. Well, I don't mean to be. It's got a huge potential to be thought about differently. But the more it goes on the same way, the more it just degrades and becomes more and more flaccid and less able to support itself. So this isn't just a blip of a problem. This is a real structural problem we've got.
Yeah, and the annoying thing is, it's like, the policymakers never learn, right? So they see what hasn't worked in the last 20 years, and they just double down on what hasn't worked rather than trying something new. It's just crazy. It's a definition of insanity. Like, I've said this. I said it earlier tonight that we should be the richest country on earth per capita, because we're sitting on the biggest iron ore reserves, we're the biggest iron ore exporter. We've got sitting on massive coal reserves, massive gas reserves. We've got nickel, we've got manganese, we've got all the stuff you need. Uranium, we're sitting on 30% of that. We've got pretty much everything the world needs other than oil. So, and we've got still a relatively small population. Yes, we've grown it a lot more than we should have, given the natural resource wealth we've got. We'd be richer if we had a smaller population. But we're still sitting on this ginormous endowment, but we don't use any of it properly. We don't tax any of it properly, and we do dumb things to basically make ourselves poorer and less productive, and less efficient and less diversified economy. And this is all self-inflicted. And it's just maddening, really. When you live here and you just look at the dumb stuff we do, and you look at how it could have been. You didn't just have to copy Norway. Qatar does the same thing. Like Qatar sells a bit less gas than us, but they're obviously a much smaller population. But they've got a similar, tax set up as Norway, and they're just riding. They're rich and they pay very low energy costs over there, and it's basically free to fill up your car, and they pay very little taxes, and they got all this social spending and all this sort of stuff. I'm not saying it's necessarily a perfect place to live. I'm sure they've got a lot of other problems. But in terms of that, they do that very well. And we could have done that. But instead, we got perpetual government deficits across the federal and state governments. We're always, short of money. We tax workers, through the nose and, exorbitantly. And we wonder, like, why are we doing this? Like, we got all this wealth. The government shouldn't be short of money. We should have plenty of money if they tax this stuff properly. We actually used our stuff properly. But we do these self-inflicted wounds, which just shouldn't exist. And that's because we run so poorly.
Yeah, and I've got the view, I've had it for some time, that actually it's the power of the corporations which is part of the problem. So effectively they, through the lobbying and through the front door and through the threats, are actually dictating a lot of government policy directly and indirectly. And therefore, to an extent, politicians are a little bit helpless around some of this stuff because they don't want to confront those large corporations, particularly some of those big international investment firms, as well as the energy firms and the mining firms. And I guess you could put it the retailers, the airlines, and pretty much everybody else in the list too. So we have a structural problem with regard to the power of corporations and the way that they seem to be able to lead politicians through the nose to do the things that benefits them rather than actually ordinary Australians and ordinary businesses.
Absolutely. It's crazy.
Well, let's move on and talk about rentals now, because I think the rental sector is another very important tipping point. And, I was pushing back against the idea earlier on that everyone was saying, oh, the rental crisis is over. The rental vacancy rates are going up. And I was seeing in my surveys more and more people saying, I'm being asked to pay an additional 10% on my existing rental property. And I can't afford to do that, but I can also not afford to move somewhere else because I can't find anywhere else. I'll have to pay more anyway. So whilst the official advertised rents might have actually moved down a little, although I don't think they did for very long, the real rents for real people continue to climb, and it's getting worse.
Yeah, absolutely. So the rental crisis is absolutely getting worse. And I've got a very comprehensive chart pack here to actually go through it, because I've looked at this issue in detail. And just to give a quick snapshot where we are. So the chart on the top left, that's from CoreLogic, now Cotality. Again, that's at the end of 2024. And what it showed is that at the end of last year, the rental crisis was the worst. The share of income spent on rents was at its highest ever level. And the chart on the right also comes from Cotality's June quarter rental review. And what it showed is that over the last 5 years, the median rent in Australia, the median weekly rent has gone up by $200. So that's $200 per week extra that Australians are paying to rent the median home. Now that's an increase of 43% in 5 years. And what it means is that the typical renter in Australia is now paying $10,350,000 more to rent a home than they were 5 years ago. So that's, when you think about that, that is a massive hit to disposable income. And especially when you think about the fact that renters are typically lower income earners than homeowners. So we're talking about more vulnerable people paying on the median renter paying an extra $10,350 per week just to put a roof over their head. It's quite disgusting, really. And, you don't have to be a rocket scientist to know what caused this. And I've got two charts here, Justin Fabo again. And it's the massive surge in immigration. So the chart on the left shows the temporary visa holders in Australia. And we know that temporary migrants are the ones who typically rent, right? So they're basically the ultimate flow measure of migration. And you can see that when the temporary migrants left at the start of the pandemic, and the chart on the right is the advertised rents by SQM Research, rents fell. And then when they surged back in once borders open, rents soared, right? So when Labor came to office in the middle of June 2022. Since then, we've had 750,000 extra temporary migrants. Now, that's temporary migrants, not including visitors, right? So that they're long stay temporary migrants. We've had 750,000 extra temporary migrants land in Australia since mid 2022. It's quite extraordinary. And over the 30 months since the Labor government came into office in mid 2022, net overseas migration, we've had 1.1 million net migrants land in Australia in just 30 months, right? And it's this surge in immigration that has obviously pushed rental vacancies down and pushed rents through the roof. It's pretty obvious there in the data. Anyone who denies it's, basically lying to themselves. And so basically rental vacancy rates hit a record low in 2023 when immigration surged. And it looked like last year, net overseas migration was moderating. So as I said earlier, it fell to 340,000 at the end of last year, and that was down from about 550,000. And it looked like rental vacancy rates were actually edging up a little bit. And part of that was, obviously the fall in net overseas migration, but there was also an increase in, group housing. So people, the number of people per dwelling actually rose. And as a result, rental demand, other things equal, fell. So it looked like rental vacancy rates were picking up. The problem is, in the past 6 months this year, the rental crisis has re-emerged, and the rental vacancy rates are back to their historic low levels. So the rental market's retightened again. That's shown by Cotality on the left and SQM Research on the right. They're both showing exactly the same thing. And data from Cotality that came out this week on actual rental listings is shown here. And what it shows, and that's shown on the left, the total number of rental listings across the capital cities is tracking at about half the level that it was during the height of the pandemic. So the number of rental listings has plummeted. And we've got the 12-month change in rental listings on the right from Cotality across all the markets. And what it shows is that across the combined capital cities, the number of rental listings just in the last 12 months has fallen by about 16% or nearly 16.5%. And it's fallen across every single market across Australia. So that's shown in purple. So obviously we've got a severely tightening rental market here. And because the market's tightening and rental vacancy rates are falling back towards historic lows, and obviously rental listings have fallen, asking rents, so advertised rents, are now surging again. So the chart on the left is from SQM Research. It's the quarterly growth in residential asking rents. After falling at the end of last year, they're now surging back up. And on the right, we've got Cotality, same story. So both data sets are showing that rents are now re-accelerating, both those charts from Justin Farbo again. And so what's the culprit? Well, I mentioned it earlier, net overseas migration looks to be surging again. So this is the same chart from Tarek Brook on the left. It's just been blown up a bit so you can see it a bit more clearly. The first 7 months of this year, we had record net permanent long-term arrivals, up about 5% on last year and up by about 56% on the pre-pandemic level. And on the right, that's from Justin Farbo, plots this series against the official quarterly net overseas migration. As you can see, there's a very strong correlation historically. Now, what this data suggests, this net permanent long-term arrivals data, is that it's a leading indicator for net overseas migration, and it suggests that the net overseas migration has surged this year. Therefore, we've had a sharp fall in the rental vacancy rate, and rents are rising again. So, you can thank the federal government for running high immigration. And the outlook for renters is absolutely dire. So I mentioned earlier, these are the charts to show it. AMP Chief Economist Shane Oliver a couple of months ago estimated that Australia is currently sitting on a housing shortage of between 200 and 300,000. And the way he says he's not sure, where it is there, because it depends on the assumptions you use for the number of people per dwelling. But, somewhere between 200 and 300,000. And Oliver said that this worsening housing shortage, or this cumulative housing shortage, has been driven by the massive ramp up in immigration and population growth in the mid-2000s. So, as we know, the federal government more than doubled net overseas migration from about 2005. So I mentioned earlier that in the first 60 years after World War II, we averaged 90,000 net overseas migration a year. And there was only 2 years in that entire 60-year period where we had net overseas migration higher than 150,000. And it was only just higher than 150,000. But in the 15 years leading up to the pandemic, net overseas migration surged to an average of 220,000. And in the last 5 years, including the pandemic lockdowns, it's averaged 260,000. And it's this surge in net overseas migration and population growth that has driven this structural undersupply of housing. And, you know, Shane Oliver actually wrote explicitly that Australian housing is, quote, chronically undersupplied, and that this has been the case since the mid-2000s when immigration levels were ramped up. That's effectively what he says. And so, you know, between 200 and 300,000 homes. Now, CBRE released their latest apartment vacancy and rent outlook, you know, earlier this month. And what they forecast is that Australia's population demand through immigration is going to continue to run well ahead of supply over the next 5 years. And as a result, Australia's rental vacancy rate, which is currently at a record low, or roughly at around a record low of 1.8%, CBRE forecast that by 2030, it's going to fall to 1.1%. So the rental market's going to tighten even further. And the individual capital city forecasts are on the right-hand side there for Sydney, Melbourne, Brisbane. You can see what they are now and what they're projected to be. And as a result, CBRE forecasts that apartment rents are going to soar. That's the chart on the left. So, you know, a dire situation. Rents are already expensive, and CBRE forecasts are going to continue to rise. And this is matched by the National Housing Supply and Affordability Council, which is the federal government's own advisory council on housing supply and affordability. It released its State of the Housing Market report a few months back. I mentioned this last time. And they forecast that Australia is going to have a 79,000 shortage of housing, so an additional shortage on top of what Shane Oliver estimates over the 5 years to the end of to mid-2029. And so that's on top of what Shane Oliver says, so 200 to 300,000 plus another 79,000. Now, it's important to note that the National Housing Supply and Affordability Council's forecasts are based on the Centre for Population's net overseas migration numbers. And those are actually pretty conservative. So the Centre for Population forecasts that Australia's net overseas migration will gradually fall back down to 225,000 per year. Now, given that where migration's at the moment, the fact that the Albanese government's just raised the planning level for international students by 25,000, that they're, you know, look like they want to keep increasing immigration, we can pretty much assume that this projection for population growth is not going to come true, because net overseas migration is going to be a lot higher than what the Centre for Population projects. But in their sensitivity analysis, that's the chart on the right, the National Housing Supply and Affordability Council says that if population growth is 15% higher than what the Centre for Population forecasts, which I think is pretty likely, then instead of having a 79,000 shortage of housing over the 5 years to 2029, we're going to have a 200,000 shortage. So that's 200,000 on top of what Shane Oliver's already forecast of between 200 and 300,000. You get the picture here? It's going to get pretty bad. Now here's the counterpoint. If the National Housing Supply and Affordability Council projects that if population growth was just 15% less than what the Centre for Population forecasts, then instead of having a 79,000 shortage over the next 5 years, or over the 5 years of 2029, we'd instead have a surplus of 40,000 homes over that 5-year period. Now, that there is a tacit acknowledgement by the National Housing Supply and Affordability Council that Australia should cut immigration. Because if it cut immigration, the housing shortage evaporates, and in fact, we'd have a surplus. That there is the solution to the rental crisis. Now, unfortunately, the Centre for Population forecasts that net overseas migration is going to stay high for forever. So it's forecast that it released in December last year, forecast that Australia's population is going to grow by 13.5 million people over the next 40 years. Now, to put that into perspective, that's like adding another Sydney, Melbourne, and Brisbane to Australia's population over the next 40 years. And in order to house that many people, we probably need about 6 million homes to be built, right? Once you account for demolitions. And the reason why I'd say that's pretty conservative, the reason why I say that's conservative is that most of these new homes will be apartments, and a lot of them will be shoebox apartments. And obviously, shoebox apartments can't carry as many people, house as many people as houses. So as a result, we need more homes. So, you know, this is just a diabolical situation for renters. But there is a solution, Martin, and it's being played out right now in Canada. just cut immigration, right? So like in Australia, rents in Canada soared to unbelievable highs in 2022 and 2023. That's shown in the chart on the left. When Canada experienced the biggest immigration and population boom in its history. A lot like us, it just had a massive post-COVID immigration surge. And as a result, rents rocketed. That's the chart on the left. But last year, unlike Australia, the Canadian government recognised that it completely stuffed up and it had created a housing crisis and infrastructure crisis. So they imposed a 3-year population freeze. And basically, they've lost a whole bunch of temporary migrants. They've gone back home. And as a result, Canada's population growth is basically stalled, right? That's the chart in the middle there. And in places like British Columbia and Ontario, which is where Toronto and Vancouver are, population's actually fallen. Population growth has slowed even more. And surprise, surprise, with this stalling population growth, that's the table on the right, asking rents in Canada have fallen for 11 consecutive months. And Ontario and Vancouver and Toronto have experienced, which I just mentioned, have experienced the biggest slowdown in population growth. They've also experienced the biggest fall in rents. So this here tells you that the solution for Australia's rental crisis is to cut immigration, right? Canada's doing it and it's working. And in fact, Canada's largest bank, BMO, they stated last month that they expect rents to continue to fall as strict immigration targets continue to slow population growth and limit new household formations. And it's not just Canada, Martin, it's also New Zealand. So New Zealand has had their net overseas migration has fallen to a 2.5-year low. It's now tracking at about 13,000 per year, which is well down on the decade average of about 50,000. And, in 2023, New Zealand's net overseas migration was 120,000. It peaked at 120,000. So it's now 13,000. So it's fallen quite significantly. It's, their immigration has slowed right down. And to nobody's surprise, rental inflation has also collapsed. That's the chart in the middle by Justin Fabo and the chart on the right. And in fact, the chart on the right, which shows new rental bonds, it actually shows that rents in New Zealand have actually turned negative. So we've got two examples here, Canada and New Zealand, which have both slowed immigration dramatically. Canada have actually, they've seen an outflow of temporary migrants, and both have experienced huge reductions in rents. Canada's actually 11 consecutive months of falling rents. What does that tell you, Martin? That the solution to Australia's rental crisis is to cut immigration, right? If we don't do it, we're going to have a perpetual housing crisis, as the National Housing Supply and Affordability Council shows, as CBRE shows. If we keep doing the same thing that we've done, we're going to continue to have the same results. This is why we keep saying this is the definition of insanity. So why won't our policymakers just look across the pond at New Zealand or look over at Canada? The Canadian government's a left-leaning government. They're considered woke, but they've managed to have this conversation on immigration. They've managed to cut immigration, and they're now solving their rental crisis. It's not solved, but they're in the process of solving the rental crisis. But instead, in Australia, Albo is ramping immigration again. He's just increased the cap for international students. We've already got the highest share of temporary migrants as a share of our population in the world. We've got the highest concentration of international students in the world. Second to Luxembourg, but basically the highest out of significantly sized countries. And yet Albo wants to bring in more. He's increased the cap, and this is into a rental crisis. So what are we doing here? Like, we've got the template in Canada and New Zealand. So why isn't the federal government willing to follow that? Because that would solve the housing shortage and it would solve the rental crisis. And I'll tell you this much, Martin, it'd solve it a hell of a lot quicker than this, trying to boost supply, which is an impossible task, which I can get into if you want as well.
Well, just let's pause there, because I think I want to underscore a couple of points. The first is, sorry, I muted myself.
That's right.
Yeah, okay. 2 points just to underscore. The first is New Zealand, of course, there's now early discussion amongst the politicians about, we can't let house prices drop much further. We need to find ways of trying to recover the ball. first point. So, it's become a political issue there because they're worried about house prices falling. But affordability in New Zealand, both for buying a new property or indeed renting, has actually become much more manageable for households in New Zealand. So what that basically says is that the New Zealand government is not that worried about housing affordability. They're more worried about, not allowing house prices to drop further. So that's the first point. The second point is in Canada, it's fascinating to see how the political conversation has gone there, because a few years ago, they were absolutely praising migration as, the thing to do. We need to grow the economy, but it's all changed. So now a lot of the senior political leaders in Canada are now very much more adverse to turning the migration knob up again, and actually are deliberately tailoring it down. So there are alternatives out there, but it does become ultimately a political decision. But I would also argue, going back to my lobbying thing, if you look at the lobbying done by the universities, done by the building and construction sector, done by industry more broadly, and we need workers, they're still wanting more people. Why? Because they want the flywheel of more people in the country to be able to sell them more stuff. So we've got this contention. So even if politically the politicians in Australia said, well, actually, maybe we should dial it back, they'll actually get heavy flack from all of those influential stakeholders in Australia.
Yeah, unfortunately, the lobby groups here are very powerful. So obviously, we've got the education/migration industry. So that's your universities and your private colleges and all those sorts of things, and then all the migration agents and everyone else around it. It's a massive machine now. And then you've got obviously the property lobby. They always want more migrants as well, because it obviously backstops demand. If you have hundreds of thousands of extra people coming in every year, that's hundreds of thousands of extra customers who need housing. So it just keeps the pressure on there. They love it. Big business generally loves high migration. So if you're a big retailer like Harvey Norman, I mean, what better way there is there to grow than just grow the population by 1.5% to 2% every year by running a strong immigration program? That's just money for jam. The banking sector, the same. More people equals more debt to sell. It's just a win-win-win for all those groups. But also, I've said this previously, one of the biggest lobby groups we've got is actually, rent seekers we've got now is the Australian Treasury, because the Australian Treasury sees it as a double win for them. I mean, if you grow the population by 1.5% to 2% every year, well, then it makes it very hard to have a technical recession. And we've just discovered that. We had 9 quarters out of 12, Australia went backwards in GDP per capita terms. It's still down 1.3% since the Albanese government came to office, GDP per capita. But the economy didn't go backwards because we had high population growth. So they can still claim that we've got growth. The overall economic pie is growing, even though everyone's slice of the pie basically stalls or shrinks, which is basically the situation we've got. The Treasury also loves it because, they collect 80% of the tax revenue, and the biggest source of tax and the fastest growing source of tax is personal income taxes. And obviously, if you import hundreds of thousands of people every year, who most of those will work, and that means you get more income tax. So it's great for the federal budget. They also get a little bit more company tax because, as I mentioned, if you're a Harvey Norman, your profits go up because you sell more stuff to migrants who come in. So their profits go up as well. So you get a little bit more company tax as well. So it's a win-win for the Australian Treasury. But the costs of this are never considered by them. Like growing Melbourne and Sydney and Brisbane, etc., like science experiments, requires a hell of a lot of infrastructure, which never gets built to the degree it's needed. We need extra services. We need schools and hospitals and all this other stuff. We need energy supplies. We need more water supplies, all these sorts of things, which generally falls on state governments. And what we end up having is the federal government collects all the benefit. The costs end up getting deferred to the state governments or to just us more generally, because the things we need don't get built. And then we end up just crush loaded. And it falls on the natural environment. Like the State of the Environment report, which is the the environment's intergenerational report effectively comes out every 5 years. The last one came out in 2021. So, we've had about 5 of them. But every time this report comes out, it always says that the number one risk for the environment is population growth. It's actually greater than climate change. So it's ranked as a higher risk to Australia's natural population growth, is ranked as a higher risk to the natural environment than climate change is. And yet governments don't care. They just keep the throttle on immigration. We'll just keep growing the population. Like the Centre for Population says, we're going to grow by another 13.5 million. We're going to add another Sydney, Melbourne, and Brisbane worth of people in 40 years. We're going to grow the population to 41.5 million people. Well, what do you think that's going to do to the environment? What do you think that's going to do to Australia's net zero ambitions? We're supposed to magically go to net zero by 2050 at the same time as our population is going to grow by about 50% by the mid 2060s. Like this, none of this stuff adds up, and they don't care, and they're doing it anyway, and they don't care. It's just as simple as that. It's just we are governed by absolute morons in this country. That's all I can say. If Canada can have this discussion on immigration, and they have exactly the same political system as us, they've got a Westminster system, right? Why can't we do it? Like, why can't Australia have the same discussion as Canada's had? Canada realised they stuffed up, and both sides of politics committed to slashing immigration, and they did it. And look, sure, in 12 months' time they might reverse and go back to their old ways, but as it stands now, they've done a 3-year population freeze, where basically 1 year into it, and Canada's had 11 consecutive months of falling rents. So when you've had a rental crisis, whereby there's more people who are homeless and they're struggling to pay the bills and all the similar stuff that we've experienced here, well, then the solution is to reverse that rental crisis. Like if you had a massive run up in rents, well, then you reverse that run up in rents and you try and bring rents back down. That's what they're doing. But not in Australia. We're not doing that. We're just going to we're re-accelerating the rental crisis, seemingly by this massive resurgence in immigration, if you go by the net permanent long-term arrivals data. So, our government doesn't care, and they just keep doubling down on the same dumb policies they've done for 20 years that have basically delivered us a less diversified, a lower quality, a lower productivity economy that has delivered lower living standards. And they just keep doing more of the same. It's just crazy.
Absolutely. And at this point, let me just talk about the ABS, because, of course, the ABS was very pissed off when people started using data that had been traditionally used previously as a genuine forward indicator of the true migration data, because the migration data takes longer to construct. But they sent messages around the place, including to you and 2GB, and said, you can't use that number.
Oh, mate, it was crazy. So, look, for as long as I've been doing this, economists have been using the net permanent long-term arrivals data as a proxy for net overseas migration. And the reason why we do it is because we can't wait. So the latest official net overseas migration data we've got, so we're in September now, is for the fourth quarter of last year. Now, admittedly, later this week, I think it is, we get the quarterly net overseas migration data for March. But even when that comes out, it's still going to be 6 months lagged, right? So we're always 6 to 9 months behind on net overseas migration data. So as a result, we've got to look at other indicators to try and get a gauge in where we're at. And the gauge that we use is the net permanent long-term arrivals data. And as I showed earlier, it tracks the net overseas migration data very closely. Now, the actual number isn't what I look at. The actual number won't be the same as net overseas migration data, but in a directional sense, it tracks. Now, just to give you a quick give listeners a quick definitional thing of it, net permanent long-term arrivals is basically done by border crossings. So every time someone comes into the country, they fill out a passenger card, and they say whether they're a permanent resident returning, or they're coming as a temporary resident but planning to stay here, for the long term, so over 12 months, whatever. Or they say whether or not they're a tourist or, like a visitor, short-term visitor. So the ABS collects that, and they get a long-term arrivals number. So permanent and long-term arrivals number. And if someone who's on a temporary visa leaves and then comes back, they count the departure and then they count the re-arrival. So it all nets out. So that's why it's called net permanent and long-term arrivals. So it's not the same as net overseas migration. So net overseas migration is basically measured. It's measured on this thing called the 12-16 rule. So you've got to have been in the country or have left the country for 12 out of 16 months to either count as a migrant arrival or a migrant departure for the official purposes. So the definitions are a bit different. But, as a directional leading indicator, the net permanent long-term arrivals data has been, used by everyone for as long as I know. And hilariously, this is the funny thing, Martin. So when I got that nasty email from the ABS, saying, even though the article they actually quoted in there was the most benign article, it was just basically me saying, oh, here's the numbers. It looks like immigration's rising again. Not good for the rental crisis because rents are tightening and blah, blah, blah. So I didn't actually call it net migration. I said it what it was. I defined it as net permanent long-term arrivals and then just did the correlation, similar to Justin Farbo's chart, showing how it typically correlates with net overseas migration. It was a completely factual article, but they got their knickers in a knot. And hilariously, after they got their knickers in a knot, I actually emailed them back and said, well, if you've got a problem with this, you better go and talk to the Centre for Population, because the Centre for Population, which is run out of the Australian Treasury, which is the official migration sub department for the federal government who does all the migration forecasts, they actually released a methods handbook. So migration data and methods handbook, which is written for the public about how to use migration statistics. And hilariously, explicitly said in there that net permanent long-term arrivals is a leading indicator for net overseas migration. So the federal government's own sub-department said that this is a leading indicator. Myself and other economists and other people use it as a leading indicator. And for some stupid reason, the ABS got their knickers in a knot and decided to throw a hand grenade at us. And I think the reason why they did it was because the net permanent long-term arrivals data is at a record level. And as a result, the federal government's been copping flack because we've all been saying, oh my God, it looks like net overseas migration has rocketed again. And this is not what the government promised us. Before the election, they promised that they'd be cutting net overseas migration and getting it down to sustainable levels and this sort of stuff. Yet this data is suggesting the opposite. Now, we don't have the official data. We're not going to have the data for June 30 or the June quarter until the end of this year, into the December quarter. So we're going to have to wait a long time to find out whether it did actually shoot up the first half of this year. But the data so far points that way. And it points that way because the net permanent long-term arrivals data is at a record high for the first 7 months of the year. And not just that, as I've just shown, the rental vacancy rates have tightened significantly the first 6 months of this year. So the first 7 months of this year. So you put those two things together, if the rental vacancy rate is tightened all of a sudden and asking rents are now, or advertised rents are now surging again, and the net permanent long-term arrivals data is at a record high, you don't have to be a rocket scientist to join the dots there, do you? It looks like net overseas migration has surged, right? So that's all people like me are pointing to. We're drawing conclusions based on the data that we've got. And if the ABS has got a problem with that, they can get stuffed because they're going to keep doing it.
Yeah, and I just will highlight the ABS also recently put out a report on one of their other pieces of analysis. This is the to do with household incomes and things. And they basically said their surveys are crap, so they've stopped doing it. So you got to say official data. Not sure how good it is. Of course, in the UK, the retail data is being questioned in the UK, as is the employment data. In the US, there are big questions about the employment data. And I'd also have questions about the employment data in Australia too. So I have to say the official statisticians in a number of governments around the world, to me, are not doing a great job.
No, they're not. And unfortunately, look, it just showed to me that unfortunately, like the ABS should really be seen and not heard, right? They should just put out data and let us argue the toss. Now, admittedly, if I'm misusing their data and I'm reporting it completely fraudulently and falsely, yeah, sure, you can pick me up on it. Or if I make a howling mistake and I misrepresent the data, no problem. But if we're just using their data and drawing correlations and then plotting it against the overseas migration data to try and draw, say what we think's happening and this sort of stuff, that's not their purview, right? We should be able to consume it, and we can all argue the toss, and people who disagree can disagree with us and whatever, right? But the fact that they got involved suggests that there's been some sort of political interference, right? So someone from the Treasurer's office has probably tapped them on the shoulder and said, hey, you got to shut this stuff down. We don't like the negative flack we're getting because people are saying that, looks like immigration's rising again and it doesn't look good. But that just shows you that they've likely been politicized. And the absurdity of it is what they did to us on this net permanent long-term arrivals data would be the same as if someone called the monthly inflation gauge inflation, right? They said, oh, inflation's risen. That the monthly inflation gauge is not the official measure of inflation. The quarterly CPI inflation is. But people use the monthly gauge as the leading indicator, even though the ABS says it's not the official one, because they don't want to wait for the quarterly one or, as an interim measure to try and gauge where inflation's going. Are they going to start sending emails out about that? Oh, you can't use the monthly inflation gauge anymore. You shouldn't use that. You shouldn't report on it because it's not the official number. Of course they're not. That's absurd. But that's effectively what they've done with this with this reporting of the net permanent long-term arrivals data. But mate, I didn't care. I made a few good stories out of it. I embarrassed them effectively, and I'm going to keep using what I'm going to keep using. So if they don't like it, what are they going to do? Don't care.
Right, absolutely. And two quick observations before we get on to the final chunk we're going to talk about. Politicization of data is a real problem, and independence of the agencies is a significant issue. And look at Trump and the Federal Reserve in the US, and questions in Australia about how independent the Reserve Bank is and how independent the ABS is. Those are questions that follow, because effectively, if they become part of the political process rather than an objective independent agency just providing data, then their purpose for being there is, well, no longer true.
Yeah, they're just propagandists. They're basically mouthpieces of the government, extensions of the government, like advertising arms of the government. So that's not what we want, though, really, is it?
No, it's not. But of course, with the control of social media, et cetera, then the government might well prefer that version of the truth rather than the reality. Let's just go on briefly, because I think there's a really important question about on the housing side again. We've spoken about the rental, but what can we build? What are we building? And the 1.2 million homes is there up in lights, and well, we're not going to meet it, are we?
No, we're not. It's quite hilarious. So, obviously the government set this fantastical 1.2 million housing target, and we're not even within a cooey's roar of it being met. And, we're currently tracking about 25% below that. That's the run rate. And the National Housing Supply and Affordability Council, I mentioned before, they forecast that over the 5-year National Housing Accord period, which is the 5-year period of this 1.2 million fantastical housing target, they forecast that we miss it by about 265,000. So it's about 22, I think, 25%, something like that. So we're not going to meet it, and it was never going to be met, because what that target required was a build rate of 240,000 dwellings per year. Now, I've got a chart which actually shows that it's the middle upper chart there, which shows Albo's fantastical housing target in a red dashed line. So we need 240,000 per year. The blue line is historical, about that. That's the historical, dwelling construction. And the best ever year we had was, I think, 2017. We built 223,600 by memory. That was our biggest year in history of building. And even that was, what was that, 8% below the government's target, which is expected to be hit for 5 consecutive years. And even the National Housing Supply and Affordability, and I'll add, actually, in that 2017 year period when we hit that record, that was when we were building all that crappy high-rise stuff. That's when we had all the really dodgily built high-rise apartments, which, according to the New South Wales Strata Council and other surveys, half the homes that were built during that period, half the apartments complexes suffered from severe defects. So we really dropped quality massively to try and meet that amount of home building, which is something you obviously don't want to do going forward. But the green line there is actually the National Housing Supply and Affordability Council's forecast. So as I said, they suggest we're going to miss it by 260 odd thousand. We're not going to be anywhere close, and that's why they've come up with that 79,000 housing shortage figure. Simple as that. Now, there is this argument continually about, Australia can just Australia should just build more homes. We just need to, approve all these, free up approvals, free up planning, and we'll magically build more homes. That's what all our state governments are saying. Well, it's not going to happen, because as the chart on the top left shows from Alex Joyner at IFM Investors, Australia already has a massive dwelling pipeline of homes under construction, right? So these are homes that we approved years ago that are still yet to be built. And that pipeline was sitting at about 252,000 last month. So that's the orange bar there is approved homes that haven't yet commenced, and then there's ones under construction. So effectively, the housing industry can only build so many homes at once. That's all the resources it has. That's all the builders it has. That's all the capacity it has. And at the moment, they are struggling to build what's already been approved. And just below that, there's a chart from CoreLogic that shows the average number of basically the average build time, and that's soared because of this bottleneck problem. We've got all these homes approved. Builders can't churn them out quick enough. They don't have enough workers. They don't have enough materials. They don't have the capacity to build this stuff. So simply approving more homes is akin to adding more water to a full bathtub, right? It's not going to help you, right? You're just going to end up overflowing. Your pipeline's just going to swell even bigger. You're not actually going to get more homes built because we don't have the capacity to build those homes. And there are a whole bunch of other reasons why we can't build these homes. The top middle chart there shows that we've had an explosion in land values. So median lot prices, so lots of land, have increased by about 1/3 since the pandemic. So we've had a massive surge in land costs. On the right of that, the top right chart, we've had about a 40% increase in residential construction costs. So costs have absolutely rocketed since the pandemic. This is all, materials and all that sort of stuff. The middle bottom chart there is the official cash rate. Obviously, we're running a significant, the cash rate or interest rates are significantly higher than they were at the peak of last decade's housing boom. So when we built that 223,600 homes, the cash rate was 1.5%. Well, now it's 3.6%. So even if the RBA cuts a few times, we've still got structurally higher interest rates, which makes it more expensive for developers and also people wanting to buy homes, right? So there's that crimps the ability to build more homes. And finally, the bottom right chart, which comes from Michael Matusik, shows that, the government's dreams of just building all these extra apartments and stuff is not very realistic, because it actually costs a lot more to build apartments than it does detached houses and townhouses. And that's pretty clear in that bottom right chart from Michael Matusik. The cost of building these things is exorbitant. And as a result, the price of new apartments the prices of new apartments are typically above what people can actually afford to pay. So in order for developers and builders to turn a profit, they've got to be able to sell here, and people have got to be able to buy that home, and they've still got to have a profit margin. But unfortunately, the price is here, and what people can afford is here. So there's a big gap. And as a result, this whole notion that, policymakers can magically approve a whole bunch of dwellings, free up the planning system, etc., and that'll magically get homes built is just utterly delusional, right? There is a speed limit to how much Australia can build. And yes, you can loosen that speed limit a little bit, like we did last decade when we had that high-rise apartment boom, but that was under completely different circumstances we've got now. We had much lower building costs. We had much lower land costs. Interest rates were lower, right? And we didn't have builders competing with big build infrastructure projects for labor. We hadn't seen thousands of home builders or construction firms go bankrupt like they have in the last few years, which means you've got less capacity in the industry. And at the same time, we also massively lowered quality last decade. I mentioned we had those huge number of shoddily built high-rise apartments, opal towers, mascot towers, flammable cladding, all those problems that we had last decade. Do we really want to repeat that? right? So yes, you can probably build a few more homes and do them a little bit quicker, but you're going to be cutting back on quality, and you're going to be building them much cheaper and lower quality and to lower standards. That's the only way you can do it. Whereas the optimal solution is what I've already mentioned, is to just cut immigration. If you cut immigration, you don't need as many homes, and you can actually take your time building those homes, and you can make them better quality if you don't have so much, if you don't have to build them so quickly to meet this massive population growth. That's why I think if we merely cut immigration back to the levels it was in the early 2000s, around 130,000 a year, which is what it was before they ramped it up. I'm talking the period between 2000 and 2004, we would be a far, far better system. And if we made sure that that 130,000 net overseas migrants we got in were predominantly highly skilled, like the ones we actually need, like, more home builders and, in areas of genuine skills shortage and genuinely skilled people that we need, we'd have a much better migration system, because it'd be not just more highly productive, it'd actually fill genuine skill shortages, but it would also take the pressure off housing and infrastructure, right? We can't solve this issue of, the housing shortage and infrastructure problems and everything else if we keep fire hosing extra demand in every single year. It's not mathematically possible for Australia to build enough housing when we continue to import hundreds of thousands of extra people into the country every year that need housing. It just doesn't make sense. It doesn't work. So if you want to solve this problem, you've got to import far less, and you've got to make sure that the people you import are actually genuinely skilled and people you actually need, rather than low skilled and working in jobs that are low productivity and not filling genuine skill shortages, which is basically the system we've got at the moment. It's as simple as that.
Yeah, and just to underscore, the average price to build a low rise is much lower than to build a high rise, because you have to, of course, put more steel and, dig down and all those things.
Yeah, lifts and reinforcing, and it's far more complicated.
It takes a lot longer. So the typical duration is also longer, and the planning cycle is longer. And so they're going to freeze a construction code, or that'll make a huge difference, right? And all of
AI, Martin, did you hear that one about AI? So the latest brain fart is we're going to have AI so it's just robo-debt all over again, right? Yes. It's robo-debt type stuff. So we're going to have AI now just to approve planning. Yeah, we're going to have artificial intelligence improve planning permits and stuff. Well, again, even if that happens, and even if we assume that it worked and didn't end up with bad outcomes, which it probably would, right? You still got the problem. We don't have enough capacity to actually build the homes. Yeah, exactly. That's why I've got these swelling pipeline. Like, if we had the capacity, we wouldn't have this massive bloated pipeline of homes under construction or awaiting construction. That would have already been built. So, this whole thing just does not make sense. And this is why it drives me up the wall every time I hear a politician or the media or a migration shill or, whoever just say, oh, it's supply. It's all supply. We just need to boost supply. Because it's almost like economists or commentators in Australia don't see the two sides of the equation, right? All they see is one side of the economic equation, which is supply. When it suits them, of course. It's just like there's a demand side, guys. And when it comes to housing, the biggest demand side is the number of people you import who need housing. It's not rocket science, right? If you're going to import a Canberra, or you're going to grow the population by Canberra every year, well, you better make sure that you've got a Canberra worth of homes that can be built to accommodate that Canberra worth of people every year. But of course, we don't have that. And we never have. So you wonder why there's a housing shortage. You wonder why they've got this structural rental shortage that, as I mentioned earlier, is only forecast to get much, much worse over the next 5 years. It's because our idiots in the federal government want to keep fire hosing more and more people into the country. And they've got no intention of stopping at all. Like the Centre for Population's own forecast, as I said, 13.5 million people in the next 40 years. Another Sydney, Melbourne, Brisbane. What do you think is going to happen? Not going to be able to build enough homes or infrastructure, and living standards are going to crash. It's as simple as that.
Which sort of takes us towards the end of the show, Leith. And conclusion is, who wrecked the economy? Well, there's a few actors there, but the government has a big role to play. But worse, they're still propagating a whole series of policies which is going to make it worse rather than better. and yet there are alternatives out there. And as we've touched on previous shows, if you did something about energy, if you did something about migration, you could actually turn the corner quite quickly and take Australia to a much more sustainable future, and one where actually people are more prosperous and more able to get on and do the things that they want to do, rather than just being more taxed to bilio, with high government debt and massive amounts of migration. So there is a stark choice. Unfortunately, most of the mainstream are pushing, oh, it's a supply problem, right, without actually getting to understand, as we've been talking about, the demand side of the equation. And as a result of that, we're going to repeat the same mistakes as we saw previously, which means that in the short term, prices will go higher, but for how long? And in the meantime, the average punter is actually going backwards, and the quality of life in Australia is degrading.
Yeah, absolutely. So often people say, "Oh, well, I could give us some policy solution. Give us some policy." The number one policy solution is to stop making the situation worse, right? And the way you stop making the situation worse is you stop doing the things that have caused the problems, right? So, I often harp on about immigration and everything. Well, step number one is to stop the policy, the big Australia policy that we've run for 20 years, right? Which has created a lot of these problems with this structural housing shortage stuff. Stop that. You stop doing stupid things with energy, right? You stop giving yourselves uber expensive energy because you don't have to, because you're sitting on oodles of energy, right? And you're a massive energy exporter. You reverse track on on the policies that have basically given you the problems, and then you can worry about the other stuff. But I think step number one for Australia is we've got to stop doing the things that have got us into the situation in the first place, right? Or at least, pull back on those things, and then we can look at the other stuff, tax reform and all these other things. But, number one is the big areas I keep going on about is migration, because that feeds into all this housing issue and quality of life issue and productivity, which we talked about last time, and all these other issues, as well as energy. Because if we ration energy, which is what Australia is doing effectively, if you ration energy and you make energy expensive, you're going to ration your living standards and ration your productivity and ration your growth going forward. Now, I'm not one of these guys who says, oh, growth's excellent for growth's sake. But the fact of the matter is, if we give ourselves less energy and more expensive energy, we're going to have bad outcomes, right? Especially at the same time as we send that same energy over to China and India and other places to burn instead of us. It just makes no sense. We should be looking after ourselves first and making sure that we have the most affordable and reliable energy system we can have, given what we've got. And then we can do other stuff, right? So, those are the two areas which if I had a magic wand, I'd fix from day one. And then once you fix those things, you then move on to other areas that need fixing. But those are the big ones I see for the Australian economy, like the immigration side, the energy side. Those are the number one and two priorities as far as I'm concerned.
Yeah, and that's the point. There are levers that could be pulled if there was a political will and the right amount of influence from, I guess, population. The events of the weekend showed people are turning out because they don't like the way things are. Here are some policies that could actually make a huge difference. So Leith, thank you very much for that. Now, if people want to find out more about what you do, where's the best place to go?
Yeah, so go to macrobusiness.com.au to read all my musings every day. I've also got Tarek Brooker on there now, so that's great. He's joined the team. He's excellent. And also I've got a YouTube channel. Just Google my name, Leith van Onselen. It's called Leith van Onselen. The tag's at Leith Vo, Leithvo. I've passed 20,000 subscribers, Martin. So
congratulations,
it's actually,
that's good.
Yeah. So something which was basically just just put up. Basically, all I do is I chuck up my interviews. That's all I do. But they've gotten semi-popular, which is good. And I only set it up as a place basically to store my interviews because otherwise you lose them. And I do so many of the things nowadays. I want to have a centralized spot where I can, when I'm old and grey and I want to look back at my life's work, I can see that my 1,000+ interviews I've done. Because otherwise, if you do give interviews and you they're dispersed all around the place. The web links die and then you lose them and you can't keep track of them anyway. So that's basically why I set it up. But yeah, if you want to watch my interviews at Leith van Onselen on YouTube, or read my articles, macrobusiness.com.au.
Terrific. Well, thank you very much. And as always, I really appreciate your insight and the charts. And I'd like to get you back on again, down the track. I'll flick you some dates and see what we can tie in, because I think these conversations are really, really important, because they go beyond the high level BS level and really get into the detail. And people can hopefully see that there are alternative strategies that can be thought about. But we need to wrought some change if we're actually to head into a better direction, because the future is generally open, but only if we can change the policies. So there you go.
Cheers, mate. Anytime, just put up the bat signal. I'll be there.
Lovely. Lee, thank you very much. I'm going to take you offline now, and I'm going to close the show. Take care. Have a good evening. Cheers. Cheers. There you go. Well, I hope you enjoyed that. As always, Lee, such great value and some really, really important insights there. Just to say that next week, we will be running Edwin on Tuesday as a property rant live. The reason for that is, as I explained, I'm doing some work in the studio, and I can't guarantee it'll be all fixed for Monday. And in fact, over the next few days, because I'm going to be taking the studio down to fix it to be able to bring it back up again, what I'm going to do is I'm going to pick a few of what I call DFA classics. I've got more than 5,000 shows in the archive. And there are a few that I think are really, really important. So I'm going to put those up with a bit of commentary around them over the next few days, so that you've got a little bit of content coming. Thank you very much for being with us tonight. Thank you very much to Jason for the Super Chat support. Really appreciate that, as always. I really, can't say how much I appreciate it. I just do. And just before I go, the dogs are still here. Yep, the dogs are here and asleep. I guess they're ready for the next walk. They've been quite quiet today, which is other than one little woof when the bins were emptied. So thank you very much. Take care. Have a good evening. Keep well. I'll look forward to seeing you on the live show next Tuesday. And check out the shows meantime, which will be up daily. This is Martin North from Digital Finance Analytics signing off. See you later. Bye-bye.